Hello everyone, I'm Dr. Ravi, the founder and CEO of FabInvest. Thank you for your interest in our investment opportunities and for joining us today. Welcome to this webinar. Our previous Bangalore investment opportunity has been a tremendous success and we have fully funded the opportunity in less than 20 days. So we are back again with another exciting investment opportunity in Bangalore, and this time the project is just the second bit from Sarjapur Main Road, and it is just 5 minutes away from the upcoming Forum Mall beside Prestige City in that area. So we strongly believe the project has potential to cross over 10,000 rupees per SFT in the next 3 years, considering various factors like the location, surrounding developments, and market trajectory. And we believe this opportunity is a low risk opportunity with a strong upside for our investors. So let's get into details. The name of the project that we are investing in is Serene Heights. It's a mid-rise gated community apartment project that is RERA approved and has all approvals in place. The project is being constructed in 4 acres of land and it comes with 2.5 and 3 BHK apartments with 240 units in total. The average size of flats in this project is 1500 square feet for a 2.5 BHK and 2000 square feet for a 3 BHK apartment. And the market price of this particular project is currently at 9,250 rupees per square feet, and this is excluding GST and other registration charges. So FabInvest is investing a fund of 25 crore rupees in this project, and this is an investment partnership opportunity with this particular builder, and it's a grade A 3 BHK RERA approved project. So for our 25 crore worth of investment, the builder is offering us 38,000 square feet of built up area as share in the project. Okay, 38,000 square feet. So this 38,000 square feet is in the form of 20 flats. Okay, 20 flats which are spread across various floors in the project, and we are acquiring these 20 flats at approx 35% discount on market price. That is the builder's today's selling price. And this upfront discounted acquisition itself is what secures our profit. So we just have to wait until the property is complete, construct was complete, and post construction, once we sell this upfront discount secures our profit. So now coming to a fractional investment, the minimum ticket size for a fractional investor is 30 lakh rupees. So this particular opportunity has approximately 80 slots in total. That is 30 lakh per slot. And we hold these flats for approximately 2 to 3 years for the construction to complete and for us to give us a good yield once we sell this particular flat. And post 2 to 3 years, we sell this, and this would give us approximately 50 to 60% profit on our investment value. Okay, 50 to 60%. And like mentioned, this profit is not based on future appreciation. This is more or less secured by the upfront discount that is being offered to us. So any appreciation that may happen is additional, and appreciation over current selling price would only increase our profit. So here are the live images of the project. As you can see, this is an advanced stage project where the construction has significantly progressed. The project comes with 3 towers in total, out of which 1 tower is fully structurally done. Okay, so the project, like I mentioned, is G plus 10 floors, and as you can see, tower 2, all the 10 floors are fully ready. Terrace work is going on. So now the builder would move on to tower 1. So another point is this building is entirely made of concrete. It's a Maiwan construction or shear wall construction. That is, it has 0 bricks, and the entire building is fully made of concrete. That is, the walls, everything is made of concrete. So this is a technology that is used in high-rise constructions, typically in ultra-premium projects that are 30 floors or 40 floors. It's very rare to see a Maiwan construction in a G plus 10 project, especially with such low unit volume of 240 units. And the builder is able to deliver Maiwan because of multiple projects that the builder is currently running. And also, the project has started only 1 year ago. If you check the RERA details, the project was approved in July 2024. In just 1 year, the builder has shown significant progress in terms of construction. So now coming to builder profile, the name of the builder is Modern Spaces. Modern Spaces is a highly famous and reputed builder in Sarjapur Road micro market. The builder has constructed 1500 flats till date and has constructed over 275 villas. In fact, the builder has developed the largest cluster on Sarjapur Road. Here is a quick glimpse of the cluster that the builder has constructed. Every building that you see in this photo is constructed by Modern Spaces. So this cluster has everything. It has 2 BHK flats, 3 BHK premium flats in the form of Embrace Vista. It has luxury villas as well in the form of Solis and Solis 2. And the entire worth of this cluster is worth over 2000 plus crore, 2000 to 2500. And this is the largest cluster in Sarjapur area. Also, the builder is CAT rated by HDFC Bank and Navi Finance. So what this means is this is a rating given by banks based on the builder's profile, track record, and most importantly, credit rating. Has the builder made the bank payments on time, his sales velocity, his financial standing? And there are 1000 plus builders in all across Bangalore, out of which only 15 to 20 builders have this CAT rating. And Modern Spaces is the latest entrant into this rating, and they have reached this status in less than 10 years from their launch. And also another important point, the builder has over 250 acres of land bank in Sarjapur area. So we'll talk about this, more about this land bank in the later part of this webinar, and I'll explain why this is an important factor in our decision to continue investing with this builder. So I'll take a quick minute to explain about what Fab Invest is to some new investors who are watching our webinar for the first time. Fab Invest is an alternate investment platform, and we facilitate our users to micro invest in prime under construction real estate projects as an investment partner. So this is an investment partnership opportunity with the builder where we invest a large fund in the project and we acquire share in the project. So this share is typically acquired at around 35 to 40% discount on today's market price. Okay, 35 to 40% discount on today's market price. So we then hold our share for 2 to 3 years until construction is complete, and post construction, we sell our units or our share for a profit at market price. So this would yield us around 50 to 60% profit on our investment value, and that is how we secure our profits or make our profits. And most importantly, this is not based on future appreciation. This is secured by the upfront discounted acquisition that we are doing. So just to give you more context about investment partnership, this is not something new that we are doing. Investment partnership has been there from multiple decades. It's there in every city, no matter Hyderabad, Bangalore, Mumbai, Chennai, even tier 2s for the matter of that. No matter what the project size is, no matter which city, investment partnership or investment partners have been an integral part of the construction industry. Just like how every business has investors, builders also have investors, okay? HNIs, high net worth investors who invest large sums of money to the project and help the builder to fund the project. So what we are doing is, instead of one single high net worth investor, we pool a group of investors and we form a big investment. Okay, instead of one HNI, we pool a group of investors and form a big investment. We then incorporate a company on the name of all these investors. And now this company will invest in the project on your behalf as one single entity. So the property or the share on the project is registered on the company's name. So your share in the company is equal to your share in the property. So this concept is called fractional ownership. Okay, the share in the property is equal to share in the company. So for those of you who do not know about fractional ownership is a 10,000 crore industry, and there are already large companies in the space, but everyone is into commercial real estate or rental income space. So we are using fractional ownership in a different dimension altogether, where our purpose is pure investment, is to grow our money aggressively at around 80 to 20% per annum. And if you want to know more details about our company and our model, please contact your investment associates, or you can call our company number and our team would be happy to elaborate more about this model in detail. So our company currently manages around 140 crore worth of assets, and we have already distributed over 8.2 crore in returns or profits to our investors. You can find various payout videos on our YouTube channel or various photos of our investors taking our payouts on our website. And we only invest in A+ grade or gated community projects. And we are one of the fastest growing fractional ownership platforms in the country. So here is a quick glimpse of our previous investment. The first project is Ingredis Vista, our previous project that we have done last month. This is our Gachibowli investment. It is with one of Hyderabad investment. Basically, it is with one of the biggest builders in Hyderabad. Someone who has constructed over 5,000 flats till date. So this is Solis. This is again with modern spaces. We have already invested with modern spaces in the past. That was a year ago. We have invested in the villa project named Solis, and we have already exited from that project. 100% exit in 1 year with 18% profit. So our first experience with the builder has been super smooth, and the builder was very professional. In fact, we were very impressed with their construction quality and most importantly their speed. So that is the reason why we have decided to double down our investment and have decided to invest in their other projects. So now let's get back to the project details. The photo that you see here is a render of the project. The project is being constructed in two phases. So phase 1 is basically tower 1, 2 and 3 that you see here. So phase 1 is built in 4 acres and comes with 240 units. It's a G+10 mid-rise project. The high-rise tower that you see here is phase 2. This tower is called Icon Tower and it is G+22 floors. Okay. So this Icon Tower is constructed on the builder's own land and it is a very premium offering. So the plans for phase 2 will be applied after the phase 1 is fully complete, at least structurally. That is in the next 9 months. So once the builder finishes construction of tower 1, tower 2, tower 3, maybe by next September, October is when they would apply plans for phase 2. But both phase 1 and phase 2 would be clubbed as one single project post construction completion. And the moment this Icon Tower is launched, its launch price would be over 12,000 per SFT. And the moment this Icon Tower is launched, that would increase the value of this entire project, that is even the phase 1. Also, speaking about amenities, the project has over 50 plus world-class amenities like basketball court, TT courts, gym, office spaces for work from home, and it also has 2 clubhouses. You'll rarely see a project coming with 2 clubhouses, and this particular project has 2 clubhouses and it's being built as a premium offering from modern spaces. Now let's talk about location. The project is located near Sompura Gate, Sarjapur Road, right opposite the Sarjapur Register Office. And like mentioned, this project is just second bit from Sarjapur Main Road. It's just the second bit. And the reason for Sarjapur, this area's growth as a strong residential hub is close connectivity to all the 3 major IT hubs of Bangalore. That is Electronic City, Whitefield and Bellandur. So this area is just 30 minutes drive from all the 3 major IT hubs, and there is no other place in entire Bangalore that connects all the 3 IT hubs. Also, Forum Mall, like I mentioned, is just 5 minutes away from this particular project. Prestige City is 1.5 kilometers away. Godrej Township, the upcoming Godrej project, is also 1.5 kilometers from here. Wipro Cells is just 5 kilometers away, and also this location has numerous international schools like Oak Ridge, etc. And also there are numerous hospitals as well. So it's a very strong economic hub or residential hub in Bangalore, and we expect, or the builders in Bangalore anticipate the prices to increase by at least 30 to 40 in the next 3 to 4 years, considering all these factors. Coming to investment overview, the project is currently priced at 9,250 rupees per square feet. So this is the market price or the builder's quoted price to a regular buyer. So we are investing 25 crore rupees in this project, and for our 25 crore of investment, the builder is offering us around 38,000 square feet in the project, and this 38,000 square feet is spread across first to 7 floors, and we are being offered 35% discount on today's market price or today's builder's price for the bulk investment that we are doing. Okay, so this 35% discount would make our all-inclusive acquisition price as 6,250 rupees per square feet. Okay, so that is a massive 3,000 rupees discount on the builder's current selling price on a per SFT basis. If you calculate on a per flat basis, that is a flat of 2,000 square feet, this translates to 60 lakh rupees upfront discount on today's selling price. So that itself would give us our profit over the next 2 to 3 years. And this is only possible because of the 25 crore investment that we are doing. Now let's get to the APF details. The project has APF approvals from all the banks that you see on screen. So what this means is all of the below banks have already done the due diligence of the project. That is the land, the legal, okay, the titles are clear, the all approvals are in place, and they have found that the title of this project is clear, and they are offering home loan facility to their customers. That is, let's say there is a buyer who wants to buy a flat in this particular project. If the buyer approaches any of these banks, the banks would disperse home loan in just 48 hours without any further project related verification because it's already done. Okay, so that's what APF means, and all of these banks have accelerated APF for this project. Also, the project has over 100 crore construction finance from Bajaj. Okay, all of Modern Spaces finance or construction loans are with Bajaj, and Modern Spaces till date, and Bajaj has actually dispersed over 860 crore home loan to Modern Spaces across all their projects. Okay, and this project on a project level basis has 100 crore loan from Bajaj. So here is a quick glimpse of the APFs. So this is SBI's APF. This is Bajaj APF, also the home loan, apart from construction loan. So this is Indian Bank. This is Bank of Baroda. So this is Godrej, NBFC, Godrej Housing Finance, APF, and this is HDFC. So like mentioned, all these banks have done their due diligence, and the title of this particular project and all approvals is very clear. So that's the reason why you have this APF for this projects. So now let's get to the registration process, or how do we acquire our share in the project. So we acquire our share in the project via a registered sale agreement. So what this means is the flats, we go to the registered office and we technically register the flats or our SFT on our company's name. That is the SPV through which we are making this particular investment. So it's only we will be able to sell these flats back in the market, not the builder. So we'll have complete control on our flats for this particular investment. So once the registration is done, we then hold this for a period of 2 to 3 years, and we sell this post 3 years. And since this is a long-term investment, this is also tax efficient, and long-term capital gains benefits are applicable on this particular investment opportunity. So the targeted exit price is around 9,500 to 10,000 rupees per square feet. And if you are selling at this particular prices, we would make at least 50 to 60% profit in a span of next 2 to 3 years. So let me explain the profit projections in terms of a fractional investor, that is someone putting 30 lakh rupees. So the minimum ticket size for this investment is 30 lakhs, and the entry price is 6,250 rupees per square feet. So let's talk a zero appreciation scenario. Okay, we'll talk two scenarios. One is zero appreciation, where we managed to sell the flat at today's rate after 3 years. Okay, so the chances of this happening is very low because real estate is an appreciating market, and the builder is able to sell flats at 9250 at an under construction project at a very early stage. Okay, we should be able to sell this for a higher price after 3 years, right? 3 years. But let's say, just for theoretical purposes, we managed to sell this at today's rate after 3 years. So what profit would we make? So if you're selling the property after 3 years at 9250, that would still give us approximately 50% profit on our investment value. Okay, 50% profit with zero appreciation. So that would mean 15 lakh profit for a fractional investor after 3 years. So for someone putting 30 lakh, you would make 15 lakh profit even in a zero appreciation case where there is no appreciation. Well, let's talk a realistic scenario where there is minimal appreciation. Let's not go overboard. Let's not talk about 30% appreciation, 40% appreciation. Let's be conservative, and let's say the property prices appreciate by just 2 to 3% in a span of the next 3 years, just 3% per year. And that would make the exit price 10,000 rupees per SFT. Okay, so this is a very conservative calculation because considering various factors like Lodha is already at 13,000 per square foot in this area. Prestige is at 13,000 per SFT, which is all these projects are just 1 kilometer away. For someone who is looking to buy a flat, when all these properties are at 13,000, Prestige would hit 15,000 in 3 years, right? It will not be at 13,000. So this property would be an excellent option, which is just 5 minutes away from Prestige or Lodha and just 5 minutes so far of that. So 10,000 is a very conservative number and you should be easily able to hit it. And if you are selling this property at 10,000 per SFT, that would give us 60% profit on our investment value. Okay, 60% in a span of 3 years. So that would mean 18 lakh rupees profit on a 30 lakh investment for a fractional investor. So the profit range for this particular investment is 50% in a zero appreciation case and 60% taking a very conservative approach. Okay. But realistically, we are certain this would hit, or we are very confident that this project would hit more than 10,000 considering various factors that I just mentioned. Prestige Lodha already at 13K. Also, there is a metro point that is sanctioned just 50 meters from this particular project. So 10K should be easily attainable. Also, let's speak more about price predictions because this is the most important factor or most important sector to consider for this investment. So here is the property price chart over the last 3 years, and this was taken from 99 acres. As you can see, Sarjapur area, flats in Sarjapur area have increased by 81% in the last 3 years. 81% in the last 3 years. And like I mentioned, the main reasons are close connectivity to all the three major ITMs. Not just that, this particular area has clean air. Okay, most of this is basically farms. I mean, this area is recently developing, right? So it has clean air and it has abundant water. What this means is, or let's say, I mean, most of you would already know if you have a home in any part of central Bangalore or already developed parts of Bangalore, you have to dig more than 1,000 feet to find groundwater. Okay, there are many cases where people dig even for 1,500 feet and they just leave it like that because they cannot find water. But in this particular area, you can find water if you dig just 100 to 150 feet. So you have clean air, you have abundant water, hospitals, schools, everything in this particular area. So that is the reason, and most importantly, close connectivity to IT. So that is the reason why property prices have grown by 80% in the last 3 years. And we in our previous calculation have just taken 8% depreciation for the next 3 years. 80% in the last 3 years, but whereas you just calculated 8% for next 3 years. So that should show you how conservative we are as an investment company, and whatever profit we are presenting is based on this conservative calculation. Also, there is a lot of national builder interest in Sarjapur area because of these factors. All the big builders foresee tremendous growth happening here. There is already Lodha, there is Prestige, there is Brigade. And also Godrej is the latest entrant into the space, and Godrej recently has acquired 50 acres of land in Sarjapur area, and this 50 acres was sold by Modern Spaces. I told you, right? Modern Spaces has 250 acres of land bank in this particular area. And this land bank is worth almost 2,500 crores. And this 2,500 crore is excluding the 50 acres that is already sold to Godrej. So Godrej has bought 50 acres at 900 crore. You can also find news about this. Just Google Godrej Sarjapur and you'll find multiple PRs or press releases from Godrej. So Godrej is launching their upcoming project in 50 acres. And this project is 1.5 kilometer. It's on the same road as Serene Heights, but it is 1.5 kilometer inside from Sarjapur road. Okay. So Serene Heights is just the second bit from Sarjapur main road. Godrej is launching 1.5 kilometer inside, and Godrej's launch price would be at least 10,500 rupees per square feet, the base price. Additionals, clubhouse, add-on, floor-rise are additional. So we foresee the project hitting a minimum of 10K, and if things go well, 11K also should be easily attainable considering all these factors. So now let's talk about the exit process. All these numbers, proper projections might sound very lucrative and attractive, but how are we going to turn this into a reality? So how are we going to make sure that all these numbers turn to be a reality, and the numbers, I mean, it actually materializes, the profits actually materialize. So I'll explain about our sales strategy. But before that, I would like to explain, we'll be following the same strategy that we are following for our investments. For those of you who have been following this, you are aware that we typically fund around 25 to 30 crore per project on a monthly basis or on a 45-day basis. So what we do is we conduct, whenever we launch a project or whenever we sign up with a builder, we launch intense marketing campaigns for almost 30 to 45 days, and we pulling the entire committed capital to the builder, that is 25-30 crore, in this 30 to 45 days. So we'll be implementing the exact same strategy for our sale process as well. Okay, so we'll be conducting aggressive marketing campaigns for 2 to 3 months, and just like how we take EOIs for someone who is looking to invest in our investment, we would be taking EOIs or token advances from people who are looking to buy a flat. Okay, so I'll just explain this more in detail in terms of numbers. So let's say we have 20 flats in this particular project. If we have to sell 20 flats, we have to bring in at least 200 site visits at that point of time. So that is 200 home seekers who visit this particular project at that point of time. Assuming 1 out of 10 actually converts, okay, into a sale. So now if I have to get 200 site visits, I'll have to advertise the project to at least 2,000 home seekers at that point of time after 2 to 3 years. Assuming 1 out of 10 actually comes in for a site visit. So the ultimate conversion is 1%. So 2,000 people who get to know about the project, to whom I pitch the project, and out of which 10% come in for a site visit, out of which 10%. So the ultimate or the net conversion ratio is 1%. If you are aware about real estate, typically the conversion ratio in real estate is 2 to 3%. But assuming a worst case scenario, 1% is what we're assuming to sell off all these inventory. And what we would do is we would aggressively market this particular project during exit so that we get or we hit these numbers. And once we have these site visits, we'll take advances from all these buyers. And once we have advances for all the 20 flats, we then sell all the 20 flats at once, and all the flats are liquidated in the span of 10 to 15 days. Okay, so that is when the entire sales proceeds are received, and that is when your payout happens. Now, let's get to the next point, exit price and timing. So now, who decides the exit price and who decides when to sell these flats? So it is you guys, it is you who are the owners of these flats. Our company is just a manager of this. So you guys decide the exit price and exit timing. So I'll explain how this works. So let's say, 2 months before the 2-year period, that is in the 22nd month from this investment, we would be sending you a price forecast, okay, or a price of what the property is currently valued at what price the builder is selling at that point of time, maybe phase 1 or maybe the iconic tower. We'll be sending you a price at which we think the property can fetch us if we put the property for sale at that point of time. Okay, and also we'll be sending you a survey of property prices in adjacent areas. Okay, the Godrej project or all the projects nearby in a 1.5 kilometer radius. We'll be sending you the price of this particular project, the price of at which the builder is selling, and the price of other properties in this area. And also we'll be sending you a price forecast. What price the property might fetch us in the next 6 months, in the next 9 months, in the next 12. So once we send this data, we will conduct a voting. Okay. So 75% of the investors should agree for that selling price and should agree for this marketing trigger. Okay. So what this marketing trigger is? The trigger for us to start this aggressive campaign that I just mentioned about. So if 75% of the investors agree for the price, agree for the marketing trigger, that is when we start the marketing activity. That is when we sell the flats. So now, what if you are in the minority? What if only 10% of the investor wants to exit, but 90% want to stay because of multiple factors? The location is going, maybe Prestige is 15K, Godrej is at 13, 14K. So if people believe the price gets to maybe 12, 13,000, but at this moment you're only fetching 10K, but let's say you're happy with 10K. So what if only minority wants to sell and majority wants to retain? So the beauty of this model is even minority is not left out. Let's say only 5% or 10% want to exit from this project. You will only sell those flats, maybe 1 or 2 flats that are sufficient enough to give exit for the minority. Okay. So majority decision would anyways apply, and also minority is not left behind because our asset is in the form of multiple units which are flats. So in case there is a minority that is looking to exit or a minority that wants to retain, both are possible. So now here is a quick investment overview. 30 lakh is the minimum investment for a fractional investor, and Fab Invest is investing a fund of 25 crore rupees in this project, and we are acquiring 38,000 square feet in this project for our investment, and the builder is offering us a 35% discount on today's market selling price. Okay. So this 35% discount would yield us approximately 50% profit on a zero appreciation scenario. And if you are factoring very conservative, that is 3% appreciation, we should be making at least 60%. Let's say things go well, prices appreciate, the metro line comes in, everything happens as planned, the profit will only increase and can get high beyond 60%. So 2 to 3 years is the tenure of this particular investment value. This is an investment partnership opportunity with one of the biggest builders in Sarjapur Road. And this is a variable investment opportunity with a significant upside for our investors. So I'll elaborate about the booking process for those of you who want to go ahead with an investment. So the first step is expression of interest. If you want to start the investment process, you'll have to sign an EOI, which is a simple 2-page document which has a gist of the transaction. That is whatever I told you today. The project name, the entry price, all of the details. And you have to pay a 1 lakh token. Okay, we don't take your entire money today. So like mentioned, we follow a subscription process where 25 crore is the fund that we are investing in this project and it has 80 slots. So to block a slot, you have to pay a 1 lakh token and you have to wait until the project is fully subscribed, until 100% subscription is done. So once 100% subscription is done, that is when we send you guys a drawdown notice that we are ready to go ahead with the registration, and there will be a 4 to 5 day window during which you'll have to remit your full funds. Post 100% subscription, post drawdown notice is sent to you. All right. So if you want to invest, you have to sign an EOI, pay a 1 lakh token, block a slot path, and wait for the opportunity to fully subscribe. And from our previous track record, we are anticipating this project to fully subscribe in the next 2 to 3 weeks. Jan 10th is when we expect the project to get fully subscribed, and the registration would happen around that period, maybe in the second week of January or at the most third week of January. So that's about the investment opportunity. So if you have any doubts, if you have any questions, please contact your investment consultants if you're already in touch with someone. If you're not in touch with someone, you can call our company number here. You can also WhatsApp us or email us at support@Fabulist. If you want to personally meet us, we have offices in both Hyderabad and Bangalore. Our Hyderabad office is located in Madhapur, High-Tech City, and our Bangalore office is located on Paniergata Road, beside or near IIM Bangalore. It's 1 kilometer from IIM Bangalore. So that's about the investment opportunity, guys. So we believe it's an extremely low risk opportunity with a super strong upside potential, where the property will cross or has the potential to cross 10,000 rupees per square feet in the next 2 to 3 years. So we'll start with the question and answers. So those of you who have any questions, you can post your questions in the chat box and I'll answer them one by one.